We had a quiet regular session on Wall Street today, with the S&P 500 closing up by 0.58%. However, we saw some major fireworks taking place after the bell here tonight. First of all, we heard news from Gilead Sciences that their drug that they're using to treat coronavirus victims had some very good anecdotal evidence at this point. It's still going through phase 3 trials and different things like that, but that positive news was enough to send the Dow futures up by about 800 points after hours. In addition to that, we also heard a press conference from President Trump giving some plans on when he thinks we should be opening up the economy in some states going forward. And then we also heard some positive news out of Boeing that they're going to be opening up one of their manufacturing facilities here in the United States as well. So all of that is leading us into tomorrow morning's open with a head of steam for the bulls. And of course, tomorrow is options expiration for the month of April as well. So for those of you that still have bullish options trades on your books, hopefully that will help you along with your trades tomorrow. So we're going to take a look at all of that, and then we're going to look at a trade application example, which will actually be a bearish trade here tonight in the clothing retail space. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 16th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel. While you're there, check out our description area where you can sign up for our email distribution list. We also have a heavy presence on Twitter. Feel free to follow me at Brandon Van Zee. We really appreciate those of you that click like and retweet on our Market Outlook related tweets to let us know that you want us to do these as often as possible. And then lastly, we have a presence on Facebook as well. Feel free to join our group at the web address located in the logo in front of you. All right, let's go ahead and check out our charts now. As you can see, I've got chart 4B pulled up here in front of us. Since today was a relatively quiet day from a range perspective, remember on this particular chart, we have this daily range label, and it will be colored either blue or orange. And if it's blue like it was today on all four of our charts, that means that it was a quiet day in terms of high to low range compared to where the markets had recently been trading. And so quiet day on Wall Street. As you can see, S&P 500 was up 0.58% today. The Dow Jones was up 0.14% today. The NASDAQ Composite was our leader yet again here today, up 1.66% today. The Russell 2000 was actually down today. I've noticed sometimes after hours that gets reset at 0 for some reason there on the Thinkorswim platform, but we were closing just a hair lower on the Russell 2000 today. It remains kind of just riding that downward trending 30-day moving average a little bit lower there. I did want to bring up one thing about the NASDAQ Composite. There's been a lot of talk on financial news networks recently about the outperformance of tech stocks, and in particular those big tech names that you oftentimes find in the NASDAQ, like Microsoft and Tesla and Amazon and those types of companies. Well, anyway, the NASDAQ Composite itself is a much more broad index of securities, and you can see it's down 4.91% year to date. But if you were to look at the QQQ, which remember is the NASDAQ 100, so really the 100 largest companies in the NASDAQ for all intents and purposes, you can see it's actually up on a year-to-date basis. It caught a few people by surprise, myself included. Hard to imagine that there's a key index out there, or in this case an ETF, that tracks stocks in the United States that's actually up on a year-to-date basis, and it's not some niche product or something along those lines. This is a massive ETF that tracks 100 different companies, and none of them are directly associated with fighting coronavirus or anything along those lines, or at least if they are, they're offset equally by companies that have nothing to do with the coronavirus. So anyway, there are some patches of strength out there. And, like we've kind of been mentioning in these videos, it's technology has been one of the more surprising areas of our market, whether it's the video conferencing players like Zoom or Citrix or RingCentral, or whether it's the cloud computing plays like your Microsofts and your Amazons out there, or even some of your hardware players out there that kind of got a little bit of bump in their sales here as a result of the whole trend of working from home. So a lot of things going on there in the technology space that are benefiting shareholders of those companies. Now, one thing I did notice after hours, we had some fairly peculiar price action that was taking place. I mentioned Zoom as just one example. It's kind of been the poster child of this whole coronavirus situation. Zoom's ticker symbol, for those of you that have spent time on there with maybe your kids are doing some homeschooling and they're using Zoom for that. So ZM is the ticker symbol. It's a fairly new company to the stock market. It just had its IPO here in the last couple of years. But anyway, as you can see, that stock has done reasonably well. Teladoc is another one, TDOC, and that stock has done really well. So there's a couple of those that are kind of the poster children, I guess you would say, of this current era that we find ourselves in. But the reason I'm bringing that up right now is it was interesting after hours that those areas that had been kind of quote-unquote coronavirus plays, they actually fell after hours when the rest of the stock market was rallying furiously after hours with, I guess, the general philosophy that if this Gilead Sciences drug works, then perhaps some of these hot coronavirus plays will cool down a little bit. But if you were to look at Zoom here on the trade tab, you can see that Zoom was trading down to about $145 after hours. So it was down $5 per share after hours when the futures themselves are just skyrocketing. If we were to take a look at /ES here, you can see futures at this exact moment in time are up over 3%. That is a massive, massive move after hours. And like I was mentioning to those of you that follow me on Twitter, what was odd about this one is not that we haven't seen these types of moves take place after hours. It was how quickly it occurred after the normal session. A lot of times it's several hours after the prior normal session had closed before you start getting the idea that the following day is going to be a pretty big day of trading. Here we knew it basically within an hour of today's close that tomorrow is going to be a massive day, assuming that things hold for the most part, and at this point they have, and we're now a good 5 or 6 hours into the after hours session, and we're still holding those gains of 3%. So the chances of us having a big open for tomorrow morning are quite high, I would have to say. Anyway, Zoom was down. Teladoc was also down. So Teladoc closed today's session at 174. After hours, it's trading down here at around 166. And I noticed some of those, like those mask companies, APT, Alpha Protech. This is a stock that generally a lot of people don't know a whole lot about unless there's some sort of a healthcare crisis like Ebola or the coronavirus or what have you. Anyway, this stock was up 5% in the normal session. It closed at $14.45. And then after hours, it's trading down here at $13. Same could be said for its counterpart, Lakeland Industries. This one doesn't do masks as much as Alpha Protech, but this one does more hazmat suits and things like that are certainly getting a little bit of a sales bump here recently for various industries. And you can see it closed at $16.61, and after hours it was trading down at $16 even some of the bigger retail kind of oriented names that have been benefiting from this. Walmart hit an all-time high here today. Walmart has been an absolute home run, and we're happy about that in this particular account as well. We bought this one a long, long time ago. This is way back in 2015. It was actually on that flash crash day back then. But that particular stock has gone from $63 back then in 2015 to more than doubling our money at $131, actually $132 here today at the close. But like Zoom and like Teladoc and some of these others I've mentioned, notice that even Walmart is trading lower after hours, despite the futures market rallying furiously and 80% of the companies out there trading higher after hours. All of these companies that had been doing really well because of the coronavirus are the ones actually trading a little bit lower in the after hours session. Whereas if you look at some stocks that have been really beat up lately, The last time I did the video, we did Discover Financial. So Discover Financial closed at $31.69 today. In the after hours session, it's jumping all the way up to $36. And that was fairly normal. That wasn't just like a one-off. If you look at a whole bunch of financial stocks or energy stocks or what have you, lots of them are jumping between 5 and, sometimes like 15%. Big moves across the board. By the way, that Discover trade that we did, because the trade doesn't go off until the next morning, some of you might have noticed that I had no idea what would happen to Discover the next day, but it actually gapped down significantly the next day after I did the presentation for the Market Outlook video. So we got a pretty good fill price on that. Our 3 contracts were filled at $13.50. So now we have kind of an upside lottery ticket of sorts, just in case, what if the coronavirus issue gets solved and, the stock market is off to the races from here going forward. I don't personally think that's going to happen, but at least we kind of have, some bullish trades working for our advantage there as well. But I found the after hours activity here tonight very wacky in that what was working previously very well were the only ones that were down after hours tonight, and nearly all of the rest of the stock market was up after hours here today. So anyway, strong performance there. Real quick to come back here, sorry to get off track there a little bit, but if we go back here to the NASDAQ Composite, just wanted to kind of show you where we stand with our postures right now. And we do have strongly bullish postures on the S&P 500, on the Dow Jones Industrial Average, on the NASDAQ Composite, and then we have a weekly bullish posture there on the Russell 2000. So again, the takeaway is it was a really quiet day from the normal trading session perspective, but it was in the after hours here this evening where we had lots and lots of excitement that should bode well for those of you that have long positions in your portfolio starting tomorrow morning. Let's go ahead and now take a look at our 3 green arrows. And so on the 3 green arrows chart, that is 4D in this case. For those of you that are premium members following along at home, remember all of you that are premium members of Market Scholars have access to the 50 different customized charts that you see David and I use. So this is 4D, and this will look at our 3 green arrows setup. If the background color of the chart is green, it means that it has 3 green arrows currently. If the background color of the chart is pink, it means that it has 3 red arrows. And if the background color is white, it means that there's a mix of green and red arrows. So right now we actually have 3 green arrows on all 4 of our charts. The only thing that I should point out as being different than when David might have reviewed with you this last night is that the Russell 2000 would not have had 3 green arrows yesterday, because yesterday it closed slightly below the moving average and produced that red arrow there, but today it got it back. So we're right back above it. Now the interesting thing about that is prices actually fell a little bit there, but because the moving average fell more, it was really the moving average that fell below the price. Well, either way that happens, assuming that the candle is above the moving average, then you do get that green arrow back. So, I guess the takeaway here is that the Russell 2000 small caps are the ones that continue to struggle. In fact, that was the kind of the philosophy of my factor-based swing trading class yesterday, that one of the worst factors out there right now is the low size factor, and that is being kind of manifested there in the Russell 2000 as well. So it seems like this is a market that right now prefers larger cap companies. We'll see how long that lasts. All right, let's go ahead and now take a look at some 12 grid analysis, starting with 5A. This is our asset class 12 grid. And remember, with this particular setup, the background colors will tell us whether we have a bullish or bearish intermediate term posture using the market forecast technical indicator that you can find on Thinkorswim. So as you can see, our bearish charts are on the bottom rung. We have 3 out of the 4 down there with the pink background color. The US dollar is considered weakly bearish because it's that light pink background color. Its intermediate reading is at 53 and falling. So because it's above 50 at this point, we would still consider that weakly bearish. If it falls below 50 in the coming week or so, it would then move to strongly bearish at that point. The other charts over here, oil and the 10-year U.S. Treasury yield have more established downward trends. Doesn't take long to identify that. You can see that these red moving averages have really been in place for both of these securities since exactly 3 months ago. Now, there's one exception to that. Right here for one day on March 18th, you had yields rallying strong enough where you closed above that moving average for one day and then pushed right back off of there. So this has been an ongoing story, one that you've heard David and I talk about regularly because they have been in such established down trends right there. So we'll see if tomorrow and the bullish vibrations that will go into the marketplace will help turn around those trends. The idea with oil is that it's probably quite economically sensitive right now, and until we get a true sense that we're going to get past this coronavirus issue and people are going to get back in their cars and vehicles and start traveling a lot more and using up gasoline, oil is going to continue to be in a house of pain until then. So maybe tomorrow will be a glimmer of hope that our society is going to start unfreezing a little bit, and that might actually start pushing a little bit of positivity into the oil market. But as we've said countless times in the past, every single time in the last several years that you wanted to get excited about oil finally bottoming, all it did was eventually rip your heart out. So we've got to be careful with that as well. But at least tomorrow there should be some sort of a story behind the idea of having oil rally. And you did have a little bit of a boost after hours, by the way. It wasn't a big one, but you can see that USO, it closed the normal session at 436. After hours, it was trading up just barely above $4.40. And so there was a slight tick higher there in oil prices once we started to get those other positive news stories starting to develop. Otherwise, the rest of the charts on the board are all green. Gold had a quiet day. It was basically flat on the session. However, like Walmart and like Teladoc and like Zoom and those other areas that were doing well previously, gold also sold off after hours here today. It wasn't violent, but you did sell off about $1 per share there in GLD. It's trading right down there at around 161 after hours. So it's giving back a little bit, and so we'll keep our eye on that. But clearly this is a pretty strong trend that gold is in. So if it does come down for, let's say, the next week or two and it starts establishing a new floor, maybe around where it had this breakout area of this horizontal resistance that we had right here on February 24th and then again on March 9th. So if it comes down to around that level in the coming days and it looks like it wants to stabilize right there, that might be an opportunity for you to take some more and new bullish trades on gold or the gold miners. Right now we have, bullish trades on both GLD and on GDXJ, but I think our GLD is actually going to expire tomorrow. I want to double check that because that's an area I might be interested in some upcoming videos. Yeah, these the sold put spread that we have on gold actually expires tomorrow. Those are the April contracts there, where we were short the 148 strike. So we're in the clear on that one. We don't have any worries there. And then, of course, we own some shares of GLD as well. In fact, we own some GFI as well. That's a really old trade. Some of you may not have even been watching the videos at the time. We actually put that one on back in January of 2019, but we've done reasonably well on that one as well because we bought it at $3.61 and ended up seeing it today at $6.69. So that one's been a quiet one, but it's been working its way higher over time there as well. So we have a little bit of exposure there in the gold-related trades, and that's a good thing. I think in this market environment where there's a lot of uncertainty and the potential of strong inflation, I think it makes sense to have some investments dedicated towards the gold market there. So with our put spread rolling off the books tomorrow on GLD, don't be surprised if at some point in the coming weeks I do a brand new trade, maybe another bull put spread on GLD for an upcoming month, because I still think that there is something to like there about the gold markets. I also like the way that long-term U.S. Treasuries bounced here in the last couple of days. You'll notice that back here on Tuesday, we had kind of this long slide lower for the previous week and a half, but the last 2 days, we had a really strong bounce there on long-term U.S. Treasuries. So we'll keep our eye on that market. Be aware that like gold and like Zoom and Teladoc and all those that had been doing well, this is another one where after hours, you can see that TLT was down about $2.50 there compared to where it closed the normal session. Now on to some of the more stock-related charts. SPY up here in the upper left, EFA, which is the foreign developed stocks right next to it, and then EEM, which is the emerging foreign stocks right next to it. And you can see that in all of these cases, I know this is hard to see, especially if you're watching on a phone, but if you've got a larger monitor, you might be able to see this. But the point is, all of those are trading very much higher than their closing price in the after hours session. So it's not just a U.S. story here where we're seeing a big surge there after hours. We're seeing it in the foreign markets as well. The EFA closed at 54.30. After hours, it was trading up there close to 56. EEM closed at 35.47, and after hours it was trading at about 36.60 or thereabouts. So anyway, looks like this will be a pretty broad-based rally that will see all parts of the globe benefiting to a degree on this positive news out of Gilead here earlier today. All of those charts have bullish postures, as you can see. It's just that the U.S. has the strongly bullish posture. The other two are weakly bullish postures. Let's take a look at the sectors now. This will be chart 5C. And these are U.S. sectors that we're looking at here. We have a little bit more, pink backgrounds on this particular grouping here. You can see that the financials have been struggling, and that's not a huge surprise with the news that we saw earlier this week. A lot of those banks had been struggling, whether it's J.P. Morgan or Citigroup or Wells Fargo, Bank of America. Most of them are doing pretty terribly this week off of some key earnings announcements. We did see Goldman Sachs come out with their numbers here earlier, I think it was today, and they actually fared reasonably well. So the investment banking side of the business seems to be holding up a little bit better than your money center banks. Nonetheless, that is an area that continues to struggle. Tomorrow should be a nice little shot in the arm to the upside for the financials, since they're one of the areas that's been beat up the most here recently. It seems like it's going to be that type of a rally where whatever was beat up the most is most prone to having the biggest upside potential tomorrow. So we'll see if that plays through or not. Industrials have a strongly bearish posture as well. One interesting thing that I retweeted on Twitter, I think it was either this morning or last night, was that industrials are actually at relative 20-year lows versus the S&P 500. That kind of caught me by surprise. Now, I know a lot of industrials are struggling right now, especially when you have the airlines as part of the industrials and companies like Boeing as the industrials. So there are certainly reasons behind it, but it just was a little bit surprising. I guess I hadn't realized that. I've known the story that, of course, the financials and energy stocks are doing pretty poorly, but I didn't realize the underperformance to the degree that has actually been occurring there with the industrials. That is, if you're comparing it to the S&P 500, which we have to remember these days, so much of the S&P 500's gains are driven by Amazon, Apple, Microsoft, Facebook, those big giants of the tech universe. And so really any sector that doesn't include those big FANG stocks and a few of the extras like your Microsofts and what have you, they're probably going to score fairly poorly versus the S&P 500. So really, you have your technology space that's probably doing fairly well versus the S&P 500, but for a lot of other sectors, they're probably struggling just simply because this has been a market that's been carried by those, those mega cap technology-oriented companies out there. So anyway, industrials struggling, materials struggling, energy, of course, struggling, and then real estate struggling there as well. So in a strange way, you should probably look for those areas that you see there in the pink charts to be the biggest winners tomorrow, assuming those gains hold. Because, like I say, it seems like after hours, everything that was working were the only things that were down after hours, and everything that was doing fairly poorly were just surging after hours. So I would expect that those charts there in the pink have a better chance than not to have some of the biggest sector performances here tomorrow with that session. Healthcare continues to be our leader. I mentioned this on Tuesday, that healthcare was the new #1 slot on the sector selector, and it had another wonderful day. It was up 2% there, and that wasn't even including the massive move higher we saw after hours out of Gilead and Moderna and a few of those. So healthcare continues to attract investor interest. All right, let's go ahead and now talk about our trade application example here for the day. And I'm going to just pull up, how about a regular market forecast chart for A. And I wanted to take a look at a company that had a recent posture switch, and that is TJX. TJX, a fairly well-known retail establishment here in the United States. Some of you might not be aware that it's actually a behemoth in its space. It's one of the biggest retailers out there. It's a $55 billion company from a market cap perspective. So it is a massive organization, and they've had tremendous success over the years. If you were to take a look at their 20-year chart, you might be astonished at that success. I mean, this was a $2 stock 20 years ago that ultimately became worth about $65 along the way, just for basically selling clothing. And as most of you are aware, this has not been the best of environments to be selling clothing. Now, they do have a specific niche of sales of clothing and other housewares, and that is discounting, where they take up merchandise from more maybe established department stores and kind of buy it, some of the unsold merchandise at bulk at a discount, and then try to sell that to its customers and help everybody save a little bit of money there. So TJX has been a true success story over the years and has created a $55 billion market cap along the way, but it does make you wonder how many people are shopping at TJX these days, with most of our country on lockdown and most states having specific rules about not having more than, let's say, 10 people together and, you know, this, that, and the other thing. You'd have to believe that a lot of TJX stores are shut down around the country and they're getting zero sales from those locations. I don't think they're deemed an essential business the way that you find grocery stores or what have you. And that may be a good comparison. Kroger, as an example, is a $25 billion company. So just to put things into perspective, TJX is 2 times larger than Kroger, which is basically, you know, the largest independent grocery store in the United States. So makes you wonder, did they get a little bit over their skis in this big move higher over the years? And are they going to get nipped a little bit here with this coronavirus issue shutting down so many of their stores? So with that background in mind, you can see that something changed here today. This stock did poorly today. It was down 3.81%. Now, that all by itself isn't all that surprising. It's had some really terrible days along the way in the last couple of months, just like all stocks have. It's how it's going about the process and what's happening today that kind of caught my eye. So first of all, you saw that it bottomed over here at about $32.72. Had this nice reversion to the mean type of a rally, and it came up to this falling 30-day moving average. And this is where it's kind of a make or break situation. If it's going to be a bullish candidate, it should slice through that moving average like a hot knife through butter, particularly since the market itself was hot at that time. Remember, the whole stock market's been strong since bottoming last month. So this one started a bit of underperformance versus the market when it refused to get up and through its moving average and instead decided to start riding that moving average lower. You'll see that it was kind of using the moving average as a resistance point back here in early March as well, and I wonder if perhaps there's an opportunity for that as well going forward. Now, some of you are probably wondering, well, how's this one going to do tomorrow? If the whole stock market is erupting tomorrow, why would we be looking at a bearish trade here? And that's it's an effective question. This one is trading higher after hours. In fact, it's trading all the way up here to $47.50 after hours. So it's trading up a whole dollar per share after hours. And that would bring you up to right around where that moving average is again. So it wouldn't get back all of today's losses, but if it were to open up tomorrow morning where it's trading in the after hours right now, it would be getting back most of the losses that it experienced in today's trading session. So again, what caught my eye with this one here from a timeliness perspective, I guess you would say, is that just yesterday it had a bullish posture. You'll notice it had this green background color here, signifying that its green line on the market forecast was trending up. Well, today it flipped right back on over to that light pink background color, telling us that we have a weekly bearish posture now, because that green line went from trending up here for the last several sessions to now all of a sudden starting to roll over. Now, where is it rolling over? Like I mentioned before, it's rolling over right at its downward trending 30-day moving average. So a lot of different things going on there. You have the flipping of the posture from bullish to bearish. You have it closing back below its moving average, and now that price is below the falling moving average. The moving average itself changed from a yellow color to a red color, and you have some evidence that it just is rolling over from a broader perspective here as well, not contributing to the upside along with the rest of the market, and really just kind of struggling to gain any traction at these levels. So it makes me wonder if this is an opportunity to look to trade it bearishly to the downside, knowing that most of our portfolio is bullish, and we have a few of those aces up our sleeve, like our long call leaps on Discover that I talked about 2 days ago. So today might be an opportunity for me to kind of balance things out a little bit with a bearish trade here on TJX. Now, the way that I'm going to do this is going to be a little bit different than how I typically show you guys bearish trades in this particular presentation. What I'm going to do is I'm going to see if this stock will fail tomorrow, either on its own doing or because the stock market itself got way too excited about some anecdotal evidence after hours tonight, and maybe even the stock market will have a big robust open tomorrow and then start selling off into the close as we start heading towards the weekend. That's always possible, right? So what I think I'm going to do in this case is I'm going to establish an order to short sell some shares of TJX, but only if it breaches today's low. So today's low is $46.29. Remember, you can see that information up here where it says H colon and L colon and C colon and all that. So we're going to look at the L colon when I point at today's candle, and you guys can see up there that it says 46.29. So what I'm going to do is I'm going to establish a selling order to only be implemented if the stock trades at 46.28 or less tomorrow. In other words, if it ticks a little bit lower than today's low, then that is a sign by the market that this is a stock that is out of favor. Because if we're going to have a big 3% open in the stock market tomorrow, and this stock ultimately ends up slipping at some point along the way, it's a stronger sign that the stock market is just not interested in this company right now. And if that is the case, then I want to implement kind of more of a swing trading mentality with it, where I'm going to do a 1-for-1 reward risk relationship. And my bogey that I'm picking out for my upside area that I'm going to keep my eye on is up here at this level. On this candle, the highest point that it got to was $51.24. So I'm going to, maybe set an alert or something along those lines, and, check out that level if it does breach that. And if that's the case, that gives me about, if I did my math right, somewhere around like $4, maybe $5 of upside risk per share that I'm taking, and therefore my price target down below that I'm going to want to monitor, assuming this gets filled. And again, that's a big assumption, but if it does get filled, then my price target that I'm shooting for would be $41 and let's call it 30 cents. So somewhere right around here. So if you think that it slips below today's candle and the momentum is going to take it lower, if it can go to the bottom of this candle over here, we will make money on that trade. Whereas if it does reverse course and it gets above this candle, then I'll probably pull the trade off and get stopped out and take a loss on it. So that's kind of the idea with today's trade. We're going to test the market. We're not necessarily going to guarantee that we're going to get filled. We're just going to test this trade. And if it decides that it wants to go bearish tomorrow on a day when the rest of the stock market is bullish, that's a pretty strong sign that this is not a wanted security in the marketplace, and it might be an opportunity for us to take advantage of it to the downside. So in order to place a trade like that, I'm just going to come on over here to the trade tab, and I'm going to come over here to the bid price and click on it where it says sell. I'm just going to leave this as the default 100 shares, but of course, feel free to position size however your paper money is established, but just for educational purposes, I'm just going to leave it with 100 shares short. And what I'm going to do over here is rather than putting it in as a limit day order, I'm going to change that to a stop order. So this will be a little bit different for some of you because you're probably used to only establishing stops on stocks that you already own. Remember, we don't own TJX. We're just using the stop as a way to tell the system that we don't want to get filled until the stock goes below a certain point. And as I mentioned before, that certain point that I'm going to be shooting for is $46.28. So I've got my stop day order, and then my stop order itself is $46.28. And effectively what this is telling the computer is that once this stock goes below that price, then basically fire off a market order to sell 100 shares at whatever that price may be. Now remember, there's always the possibility of a gap down, and there's other things to consider there, but for the most part, that is the philosophy that I want to practice on this one on a day that I expect to be very, very bullish for the general stock market tomorrow. I don't want to get too crazy with a bearish trade. I want it to kind of have to force its way into my portfolio if it is going to happen at all. So let me go ahead and click confirm and send, and then we'll ship that off, and we'll see if we can get filled on that tomorrow morning at some point. All right, well, thank you for joining me here today. As always, if you got value out of tonight's video, I would encourage you to click like for me on Twitter. That lets both David and myself know that you want us to do these on a daily basis. You probably notice that it's quite late for me right now, as my days are just very, very chaotic now with kids home from schools and different things like that. It's made a lot of people's lives a lot more hectic than they probably preferred, and I'm sure many of you know exactly what I mean there. So if you appreciate the couple of hours that it takes to research and to produce and to upload and edit and do all those things on a daily basis for free for you here on YouTube, please do us a favor and click like for us on Twitter. David will be back with you tomorrow, and then I'll be getting the sector selector rankings sent out tomorrow night as well. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.